Hello and welcome to Big Deal. I'm Nisha Poddar. Let's focus on the theme playing out for the past many months, and the frenzy still continues. It's the block trades on the exchanges which have given many investors and even promoters an opportunity to take advantage of the equity window which is provided in the market. But what's important is that there are many trends that really emerge from this particular theme playing out in the market. Let's discuss this and the market trajectory, which whether or not will support future trades as well. Let's find out from the experts on the show today. Let me welcome on the show Anup, Maheshwari and Subhrajit Roy. Gentlemen, so good to have you on CNBC-TV18. Now, Anup, so good to have you in our studios after a long time. Now, I wanted to understand, there are many factors which are at play for the market. And even Nifty 50, after reaching almost to 20,000 levels, now is struggling to even really rest at 19,400 levels. How are you seeing the various factors playing out, and also keeping in mind the monsoon deficit, which not in a big way has been yet spoken about, given we are in the middle of inflation?
Sure. So Nisha, India is an interesting market, and we always say, it's attracting a lot of interest globally as well as locally, obviously. And things are never exactly as good or as bad as they're made out to be. I think it's important to sometimes just be a little more, take the middle path.
Yes.
But, what's really interesting in the last year particularly is how the breadth of the market has been fairly wide, especially as you go down the market cap chain.
Yes.
So while at an index level, the market, like you suggested, seems to be struggling, that's largely the domain of a few large caps that haven't done much.
Yes.
But underlying that, it doesn't feel like it's struggling. It feels like quite a bull market.
Oh, yes, a lot of action in the mid cap and the small cap.
Exactly. So that's really quite, and there's a lot of breadth there. It's literally across sectors. So I think there is interest, obviously, in India, globally, as well as locally.
Yes.
We're seeing flows in that mode.
Yes.
Typically, when both domestic and foreign flows intersect positively, they normally are moving in opposite directions.
Yes.
But when they intersect positively, it tends to create that much more of a upward trajectory. And then eventually you will hit some valuation hurdles in the short run.
Yes.
So India is a very clear, long-term, exciting story. I think that's pretty obvious. And if you look back in the past as well.
Yes.
But there are these periods where it builds up a lot faster than it's supposed to, and then it rests for a while.
Yes.
I think that's one of the phases we seem to be in right now. There's a fair amount of momentum.
Yes.
At some point, it will have to pause.
Yes, you comes from a man who has seen many cycles of the markets for many decades. Subhrajit, you heard Anup about the future trajectory of the markets. Now, you've been a busy man, along with many other investment bankers, with the frenzy of the block trades that we've seen. What is the theme that is really playing out? And we've never had, let me put that across, we've never had such a successful run of big block trades in the Indian markets. Would you agree?
Yeah, totally, Nisha, and great time to be in the markets. What we have seen, as Anup rightly mentioned, probably a continuation of a trend which has got stronger and stronger. Even if you go back for last 3 quarters, frankly, block trades has been one of the most consistent products within equities. $2 to $3 billion of block trades happening every quarter for the last 3 quarters. What you have seen this particular quarter, in let's say last 3 months, has been the right intersection of both domestic and foreign flows coming together, and which enables trades across market caps. And the reason you have seen the volume of trades happening in such manner is no longer limited to large cap stocks or highly liquid stocks. In fact, what is a bit more interesting is the proportion of mid cap and small caps which have got traded very handsomely. Large stakes, block sizes, multiple times the liquidity, and most importantly, most of the blocks have returned well after the trade getting done. Oftentimes, if the trade doesn't get done well, it creates overhang and the stock kind of gets subdued. But almost every block trade, they think about large cap, small cap across sectors, have done pretty well. And domestic flows are always very strong, and on top of that, FI flows for the last few months have only added more heft to the buy side, and that enables these transactions to happen so seamlessly, also leading to a good aftermarket.
That's right. A lot of frenzy also seen in the mid-cap and the small-cap universe. But Anup, in this particular block trade trend that we have seen, what stands out for you? And why was it such a successful run and it still continues as of today?
I guess the good thing is, you have a whole bunch of private equity firms, at the point of exit.
Yes.
And thankfully, that's also being met at a time when there's a fair amount of interest in India and demand, particularly from public market funds.
Yes.
So it's intersecting really well. That creates these opportunities. Also, again, it's not a very deep market on the screen.
Yes.
If you go out to buy companies on the regular market exchange, there's a lot of impact cost.
Yes.
So people prefer block transactions. India is a very block-based market in many ways, especially as you go down the market cap chain.
Yes.
So this becomes like an almost parallel wholesale market going on, wherein you can match buyers and sellers in a much better way.
Yes.
And especially when private equity firms are in their last leg of position holding and exiting, and if it's a good quality name, then that really works well for public markets, public market funds. So that's, I think it's good because there's a very nice seamless shift of ownership taking place.
Yes.
And meeting demand and supply requirements on both sides. That's always a good, healthy thing for any market.
That's right. So private equity owners have been actually the biggest beneficiaries. Though promoters have also sold, we can come to that later. But what, in your view, has been the quality of the paper and the quality of the investor in these trades?
So that's the good thing. I mean, we've seen generally fairly good quality offerings being met with good quality funds as well, looking into them. This market that way has been able to differentiate IPOs, placements quite well. I mean, the good ones are getting snapped up very quickly and there's a lot of demand for them. The weaker ones are seeing more modest demand.
Yes.
So I think people are evaluating each of these opportunities very fundamentally. And, that's working well for everyone concerned. And even promoter blocks that are coming, frankly, if it's a good enough name. So, I guess it's a function of, like I mentioned, demand and supply. So there's a lot of money interested in India,
Yes.
but it needs to find a source of supply.
Yes.
And the only sources of supply are effectively, private equity or promoters in
Yes.
some cases. That's the only way you can absorb that capital. Very difficult to do it on the screen otherwise.
That's right. So a few points that you made, and especially about the investors, there's enough offtake by other investors also coming in. And private equity, as we mentioned, has been a beneficiary. But from the trade point of view and from investment bank point of view, Subhrajit, one of the landmark deals that really took place was Coforge Bearings transaction. Bearings managed to offload a large part of its holding, in fact, makes full exit on the bourses. We haven't seen this kind of transaction really take place at a short time limit in the past. Though Crompton Greaves Consumer was one such example, but there again Advent struggled over the years to really offload its stake. What is the trend really emerging, and what are private equity players now saying with this new option of exit being available in India?
Yeah, so that clearly has been a classic case study where a lot of the block trades we have seen, especially in the small and mid cap zone, have been anchored by long onlys, and a bulk of them have been domestic mutual funds. If you see the domestic flows, almost, in our estimate, almost 30-40% of the flows have gone towards mid cap and small cap funds. And you can imagine the ability to deploy those kind of cash flows on the screen is extremely difficult. And then you have a block trade where it is a great underlying name. And especially in this particular trade, it was a cleanup. So the entire overhang of a potential trade in future goes away. So all that added to an excellent deal dynamic for the funds to participate. And what we kind of saw, not only the deal itself, but the trade post that was a clear clear outcome because of all this, because of the combination of all these factors. From a private equity standpoint, what it does is, and this is not a straight trade, we have seen many trades where a larger portion of the companies come to market, trades which have been multiple times the ADTV that typically you've seen blocks get done at. It gives a lot of confidence to private equity holders who now pretty much see India as a bit more liquid market, at least from a block standpoint. and hence they understand that strategic exits are not the only way to monetize large positions, and you have a pretty compelling option through block trades to do that, and do that pretty meaningfully well without disrupting the underlying company, as well as get a good monetization over time. In the past, multiple tranche monetization were always looked down upon, saying will create overhang, but as long as they have happened at times when underlying company has been doing well and has gone into good hands, time and again we have seen private equity players being able to monetize very successfully. So I think it is a great case for Indian markets in general.
Yes.
And that should in turn encourage PEs to make more investments into India.
So Subhrajit, are already some of the PEs lining up with this kind of an exit? Is that confidence being built?
Yeah, so we do see a lot of interactions with private equity sponsors who are evaluating transactions they always think about the potential exits and exit timeframes as well. And interestingly, while of course IPO and strategic exits are always the two most obvious options for their stakes, they feel more confident about the IPO route as well, especially if they have larger than, let's say, significant minority positions. They do realize that now it is a very viable alternative, and it just helps them from a decision-making standpoint.
Right. So, Anup, what do you make of this? Of course, does it talk also about the depth of the Indian market? Because many private equity firms had really confided, anonymously that there is not enough depth in the Indian market. So even if they have a large ticket buyout, exit can be a problem. So is that now really sorted with one of these trades? And what do you have to say about the overall direction in which the new investor and the foreign investors are viewing India?
Sure. So depth is a bit contextual. I mean, if I just rewind a year ago, there wasn't as much depth.
Yes.
There was a bit of that, funding winter going on.
Yes.
So it needs a bit of a positive direction, public markets, heading upwards, flows coming in,
yes.
and then the liquidity suddenly emerges. So there are these pockets where there's a lot of liquidity,
yes.
this being one of them, and therefore
yes.
it makes sense for any private equity firm to liquidate accordingly when there's demand. But there will be ebbs and flows. I mean, it's
yes.
not going to, I don't think it's a permanent sort of
yes.
liquidity option, but this is definitely a good phase.
Yes.
And again, as I said, it's coinciding with the fact that India is of a lot of interest globally.
Yes.
There are a lot of old hands investing into India who are allocating more, who understand India very well over many years.
Yes.
And there's a whole bunch of new first-time investors also coming into India at this point.
So India is becoming a destination of choice, and also foreign portfolios are really allocating a lot of money. So therefore, the demand is also building for many of these names.
And local funds as well. I mean, if you just look at the sort of
the
flows that domestic funds are getting, I mean, it's a little challenging at some level, because you see small cap funds which have grown way beyond, the market caps of small cap companies. And it's challenging, frankly, to manage that level of size. You have
yes.
to take much longer term positions, but the flows are coming through, and therefore there's that much of cash that needs to be deployed.
Okay, we have little time. I'll ask you, do you think that the startup IPOs, are they making a comeback?
In terms of, let's say, these consumer tech type of names?
Do you think that enough appetite will be there this time around?
Yeah, there will be. I mean, it's, if, as I mentioned earlier, good quality names, people are definitely in the market for. There are multiple names that are already being talked about
yes.
in the next 6 to 12 months.
Are the valuations more comfortable this time, Anup?
So the valuations will again be a function of demand and supply at a point in time. But there is, at this point in time, I would have to say that, when you're coming into public markets, unlike the last time, which was, just people weren't even familiar with these companies as much. It was a lot of hype,
yes.
and therefore nobody knew exactly how to value it.
Yeah.
After having gone through that up and down cycle and now come back, and with the fundamental consolidation and the economics improving over
yes.
the course of the last 2 years in these companies,
yes.
I think people now have a path to profitability
yes.
that they can see, and therefore express it better in terms of valuation.
So lessons have been learned there. Subhrajit, my final question to you, very quick answer. How is the IPO pipeline looking? We have seen some very interesting IPOs in the last few months, and they have been all successful as well.
So clearly, I think CY24 should be a pretty busy IPO calendar. Of course, there will be some outage around elections, but around that, especially more back-ended to the second half, we do expect a lot of the larger trades to kind of hit the markets at the point in time. What you have seen are a lot of small trades getting done very well, which is always great from a investor appetite standpoint, and I think it sets a nice platform for the larger trades to start hitting, probably starting off towards the end of this year, early part of next year,
Yes.
and then keep building through the entire calendar.
All right. So you mentioned a very important key factor for the markets and also the equity market trades, that is the election time. So we'll all wait and watch out for that, and the action picked up ahead of that. Whether or not this block deal rally really continues, there is enough pipeline at the moment, and whether market has enough appetite, we need to see going forward. But yes, there had been a good demand. Thank you so much, Anup, as well as Subhrajit, for joining us on this interesting conversation. With that, we'll slip into a short breather on Big Deal. But